We're going to go through a high-level overview of sales transactions. So estimates, sales orders, invoices, and sales receipts. Now, if you don't see one of these on your screen, on your home screen here, and you feel like you do need to enable them, we can go up to Edit and Preferences, and then to Desktop View and Company Preferences, and see I can enable sales receipts here. And if I want to turn on estimates, if I click there, it'll take me down to jobs and estimates, or sales orders. I can click there and I can enable sales orders. Okay. So just a high-level overview. Starting off with a quote or an estimate, this is just what it sounds like. We're getting information to the customer so they can make a decision. Okay. This is a non-posting transaction. It does not affect your financials at all. It does not affect your inventory at all. Okay. However, an estimate is a budget for your job. So QuickBooks does have budgets, right? Planning and budgeting. We can set up budgets. When you set up budgets at the customer level here, you're setting up budgets at the general ledger level. So you can say set up a budget for customer 123, but when you set it up, it's setting it up based on your chart of accounts. Okay. On an estimate, we can set it up still at the customer level. Let me expand. Still at the customer level, but I can do it at the task level. Okay, so I can say how much weld work do I expect us to do? How much in inventory parts do we expect us to use? Okay, so it creates, when we create this estimate, we now have a report that is our estimates versus actuals. So again, it's kind of like a budget for a job that we're working or for a customer. Okay. Now we have a lot of customers who actually create their estimates in outside systems. They have a CAD system or some kind of quoting estimating system, right? Because it's design and dimensions and all sorts of intricate extra things that QuickBooks won't do, but they still will put the estimate into QuickBooks because they want to be able to run those estimate versus actual reports. So you should plan to use estimates if you quote your customer before they move forward, or if you're trying to set up some budget at the task level for your jobs. Estimates are not required. You do not have to start here. You can just go right into invoices or go right into sales orders. Okay? A lot of our customers don't use estimates at all. So if you have an online web store that people purchase through, or all of your customers have price lists, then they don't need an estimate. They already, the price list is their quote. So they're just calling you when they're ready to order, okay? And when they're ready to proceed, not just when they're trying to get pricing. So when they're ready to proceed and we haven't shipped it yet, that's where we move into a sales order. All right, in a sales order, this is unique to QuickBooks Desktop. So QuickBooks Online does not have a sales order step in there currently. Maybe they will in the future. But a sales order looks just like any other sales transaction. It is a non-posting transaction. It will not affect your financials, but it does drive demand for inventory if you are using inventory. So when I explain this to my customers, I like to say a quote or an estimate, right? That's just giving information to your customer. The sales order is when the customer commits. They're going to move forward, and we internally now have to do something. Okay, so at the sales order stage, when I put something on a sales order, so I'm going to add some vanity fixtures here, bath vanity fixtures. So before I save it, if I look at my quantity available, I have negative 54 available, which I need to order, right? But I'm going to go ahead and add 100 here. And once I save it, and I go back and look at my quantity available, now I have negative 154 available. It didn't change my quantity on hand, but it did change my quantity available. So a sales order type of transaction is basically like, this is what needs to be filled. Okay, so this is a commitment from a customer. We have a commitment from a customer. They're going to purchase this. Now we need to go fill it. Okay, so it affects our quantity available. Now, if you had non-inventory parts on here or service items or anything, they don't hold a quantity available, but it does still, right? Even if it's a non-inventory part or a service item, a sales order still would function as this needs to be completed, okay? Now again, you don't have to do an estimate first. You can go from an estimate to a sales order, but you don't have to. You can go just to the sales order stage. So again, a lot of our customers who have online stores, we import into QuickBooks the sales order so they can fulfill. But again, non-posting does not affect financials, just helps to drive demand for product, okay? Next, we have an invoice. The invoice is the first one that we're going to talk about. That is a posted transaction. So what does that mean? At the invoice stage, that's when your accounts receivable is affected, right? So if your customer owes you money, invoice. That's when your sales numbers are affected. If you're using inventory parts, your cost of goods sold and your inventory numbers are affected. Your financials are affected. So your profit and loss is affected when you create an invoice, as long as you're on an accrual basis. Of course, cash basis, it affects when they pay you. That's when your financials are affected. But on an accrual basis, which most of our customers are on, some sort of modified accrual, at the invoice stage, it affects your financials. It relieves inventory. So instead of just affecting quantity available, like a sales order, it affects quantity on hand, right? That inventory is now gone. Now again, you'd want to create an invoice if you're planning on allowing customers to buy on account, right? Because it's going to hit accounts receivable. So if you're just receiving cash ahead of time, probably invoice may or may not be the best one to use. In the example of somebody who is coming into your store and picking product up, or counter service sales type of sales, a sales receipt is better because they're paying at the time of purchase. Now, if we go back to the online sales area, generally when we set up customers with online sales, right, they purchase online, they pay at the time of purchase. So we receive a payment, and then we also enter a sales order that we move to the invoice stage and apply the payment to the invoice. But we still run those sales through accounts receivable because they have that prepayment. So I want to show it as a negative accounts receivable since they paid until we actually ship the product, and then it clears that negative accounts receivable. Okay. But again, in invoices, if they're going to purchase on account, or if you need to function through an accounts receivable account, a sales receipt, so if I look at an invoice here, right, it's hitting accounts receivable. On a sales receipt, it's different. On a sales receipt, you can choose to hit a bank account. You can choose to hit a other current asset account. So if you had some kind of undeposited funds, or some kind of clearing account, Fourlane Visa clearing, something like that, you don't have to hit accounts receivable, basically. You're not hitting accounts receivable. It's a cash type of transaction. So payment at the time that the transaction's happening, okay? But besides the payment side, right, so everything else is the same in regards to a sales receipt and an invoice. So if you're selling an inventory part, inventory goes down, cost of goods sold goes up, sales goes up at the time you post your sales receipt. The only difference is, right, the offset to sales is accounts receivable on an invoice. The offset to sales on a sales receipt is whatever account you choose up here. Generally, it's a bank account or an undeposited funds type of account. Okay, but everything else functions the same on a sales receipt. Now going back to the home screen here, you can see, right, a sales receipt comes in our little pathway after the receipt of payment, because they're expecting that you're receiving payment at the time you're creating the sales receipt. So you don't have to have this step. You just go from sales receipt straight to record deposits. Okay. So that is a high-level overview on the sales type of transactions in QuickBooks. And of course, we have more detailed videos to come.